Hey everyone, and welcome back for another deep dive.
Always fun to dig into a new topic.
That's right. Today we're going to be looking into Warren Buffett's recent investment moves.
Oh, yeah. He's been making some headlines.
He has, and
Yeah.
he's known as like the Oracle of Omaha, right?
Yeah. Mr. Long-Term Investor.
Exactly. And that's what makes some of these moves so interesting.
A little out of character, you might say.
Yeah, so the main thing we're looking at today is this article from the Motley Fool.
Okay.
And the title is pretty intriguing. It's called Warren Buffett has sold $133 billion worth of stock in 2024 so far. But this small $550 million purchase is sending a big message to investors.
Wow. So selling billions, but then there's this small purchase that everyone's talking about.
Yeah, and it's Domino's Pizza.
Domino's, huh?
Interesting. Yeah, so on one hand, you have this massive sell-off.
Yeah, that's a lot of money even for Warren Buffett.
I mean, $133 billion.
It makes you wonder what he's seeing that we're not.
Right, like is he worried about the market? Is he like, anticipating some kind of downturn? Yeah, is this a signal for the rest of us?
And then on the other hand, you have this Domino's purchase.
Which seems almost like a footnote compared to the sell-off.
Right, like $550 million. That's like pocket change for him, right?
Practically.
But it still represents a significant ownership stake in the company.
Oh, really? How much are we talking?
Like 3.7% of Domino's.
Huh. So it's not nothing.
No, it's not. And it makes you
Right.
think, okay, what does he see in Domino's?
Right, out of all the companies out there, why Domino's?
And before we even get to that, we have to address the elephant in the room.
Which is,
The $133 billion in sales. Like, what's going on there?
yeah, that's the big question. What's making him sell off so much of his portfolio?
I mean, this is Apple we're talking about. He sold over 2/3 of Berkshire Hathaway's stake in Apple.
Wow, and Bank of America too, right?
Yeah, they took a hit as well.
So is it valuations, do you think? Does he think these companies are just overpriced?
Yeah, I mean, could be that he's looking at their intrinsic value and deciding they're not worth what the market's paying.
That's a scary thought. Because if anyone knows how to value a company, it's Warren Buffett.
Right, and it makes you think, what does that mean for our own investments? Are we holding on to things that are about to tank?
Now, hold on. Let's not panic just yet.
True. We need to look at the whole picture.
Exactly. So let's get back to Domino's. What's so special about this pizza chain?
Okay, so they have this thing called a fortressing strategy.
Fortressing. What's that?
So basically, they open new stores near their existing ones.
Wait, wouldn't that, cannibalize their own sales?
You'd think so, but it's actually been really successful for them.
Huh. How so?
Well, it allows them to dominate market share. They can basically saturate an area and make it hard for competitors to get a foothold.
So it's like they're building a fortress around their business.
Exactly, and it seems to be working. They're profitable, their margins are growing.
And they're global, right?
Oh, yeah. They're all over the world.
Okay, so strong business model, global reach. Makes sense.
But still, it's a relatively small purchase for someone like Buffett.
Yeah, you'd think he'd go bigger if he was really bullish on Domino's.
Right. That's what's so puzzling.
Maybe it's a size thing,
What do you mean?
Well, in his shareholder letter back in February,
Yeah.
Buffett talked about how it's actually hard for him to find companies that are big enough to move the needle for Berkshire Hathaway.
Yes, he's managing so much money.
Exactly. He needs companies with massive market caps to make a real impact, and those companies are often very expensive.
So it's like he's too big to buy certain companies.
Kinda. Yeah. He even said something like, very few companies in the U.S. can meaningfully move the needle for Berkshire.
So he's limited in a way.
Yeah. He can't just buy up any company he wants, even if he thinks it's a great investment.
That's crazy to think about. I mean, imagine having so much money that you can't even invest it the way you want.
It's a good problem to have, I guess.
I suppose, but it's still a problem.
Definitely. And it brings up an interesting point for us regular investors.
Just.
Well, if Buffett, with all his resources, is having trouble finding big companies to buy, maybe we should be looking at smaller companies.
Oh, so you're saying there might be more opportunities in the small and mid-cap space?
Exactly. Those companies have more room to grow,
Yeah.
and their valuations might be more attractive.
So are you saying we should all go buy Domino's stock now?
Whoa, hold on. Let's not get ahead of ourselves.
Okay. But I'm starting to get hungry thinking about all this pizza.
Me too. But remember, investing is about more than just following someone else's lead, even if it's Warren Buffett.
Right. We need to do our own research and make sure any investment aligns with our own goals and risk tolerance.
Exactly. It's about finding the right fit for you.
So let's dig into that a little bit. What makes smaller companies so appealing right now?
Well, for one thing, their valuations tend to be lower than those big companies in the S&P 500.
Okay, so you're talking about things like the price-to-earnings ratio.
Exactly, the PE ratio, and if you look at the mid-cap S&P 400 and the small-cap S&P 600,
Yeah.
their PE ratios are lower on average than the S&P 500.
So that suggests they might be undervalued.
Potentially. Yeah, they could have more room to run.
Okay, so this Domino's purchase isn't just about pizza, it's about a broader trend that Buffett might be tapping into.
That's what's so interesting about this whole thing. It's like he's giving us a glimpse into his thought process.
And maybe a hint about where to look for opportunities.
Exactly. We don't want to just blindly follow him, but we can learn from his approach.
Right, and that's what this deep dive is all about.
Understanding the why behind the what.
Exactly. So let's keep digging and see what other insights we can uncover.
Sounds good to me.
It's really making me rethink my own portfolio, you know?
Yeah, me too. It's like a wake-up call.
Like maybe I've been too focused on those big-name companies.
Yeah, the ones that are always in the news.
Exactly. But maybe the real growth is happening elsewhere.
Potentially. Yeah, and it all comes back to that idea of intrinsic value.
Right. Finding those companies that are worth more than what the market is currently giving them credit for.
And those hidden gems, those diamonds in the rough, they could be anywhere.
But you're saying they might be more common in the small and mid-cap range.
Yeah, statistically speaking, those companies tend to have lower valuations.
So there's more potential upside.
Exactly. And we've seen Buffett himself dipping his toes into that pool with Domino's.
Right. And some of his other recent purchases, too.
Like Ulta Beauty, SiriusXM.
It's interesting how he's not afraid to venture outside of his usual comfort zone.
Well, he's always been about finding value wherever it is.
That's true, but it's still a good reminder for us, you know?
Absolutely, to keep an open mind.
And to not be afraid to look beyond the obvious.
Exactly, because sometimes the best opportunities are the ones that are hidden in plain sight.
So if we're going to start exploring this smaller cap territory,
Yeah.
what are some practical steps we can take?
Well, first of all, you got to do your research.
Of course.
Don't just blindly follow Buffett, or anyone else for that matter.
Right. We need to understand the businesses we're investing in.
Exactly. And that means looking at their financials, their management team, their competitive landscape.
Their growth prospects, all that good stuff.
Right. It's about making informed decisions.
And also about understanding our own risk tolerance, right?
Absolutely, because smaller companies tend to be more volatile.
So we need to be comfortable with a little bit of a roller coaster ride.
Exactly. And that's why diversification is so important.
Don't put all your eggs in one basket.
Exactly. Spread your investments across different sectors, industries, company sizes.
That way, if one investment takes a hit, the others can help cushion the blow.
Right. It's about managing risk.
So how can we actually get started with this whole small cap investing thing?
Well, there are a few different approaches.
Lay it on me.
You could look into ETFs that focus on smaller companies.
Like the ones we talked about earlier, VXF and AVUV.
Exactly. Those are good starting points.
And what about mutual funds?
Yeah, mutual funds are another option.
So with mutual funds, we're basically relying on professional fund managers to pick the stocks for us.
That's right. They do the research and make the investment decisions.
So it's a more hands-off approach.
Kinda, yeah. But you still need to choose a fund that aligns with your goals and risk tolerance.
And make sure the fees aren't too high.
Absolutely. Because those fees can eat into your returns over time.
Okay, so ETFs, mutual funds, those are good for people who prefer a more passive approach.
Right.
But what about for those of us who like to pick our own stocks?
Ah, the stock pickers.
Yeah, we like to do our own research and find those hidden gems ourselves.
Well, in that case, you might want to focus on specific sectors or industries that are poised for growth.
Like what, for example?
Well, artificial intelligence is a hot area right now.
Oh, yeah. AI is everywhere these days.
Exactly. So you can look for companies that are developing innovative AI solutions.
Or renewable energy, that's another big one.
Yeah, with climate change becoming more and more of a concern, there's a lot of interest in clean energy technologies.
So solar, wind, geothermal, all that good stuff.
Right, it's about identifying those emerging trends and finding the companies that are leading the charge.
So we need to stay informed, read industry reports, attend conferences.
Exactly.
You do your homework.
And not be afraid to think outside the box.
Absolutely, because some of the best investments are the ones that no one else is talking about.
The ones that are flying under the radar.
Right, and that's where the real potential lies.
But even if we find a company that we think is a winner,
Yeah.
we still need to be cautious, right?
Of course, investing always comes with risks, especially when you're dealing with smaller companies.
So start small and gradually increase your exposure as you gain more confidence.
That's good rule of thumb.
And remember, it's a marathon, not a sprint.
Exactly. Don't get discouraged if you don't see immediate results.
It's about building a solid foundation and making smart decisions over the long term.
That's the key to success in investing.
And speaking of success,
Yeah.
what's the biggest lesson you've learned from all this Warren Buffett stuff?
It's a good question. You know, I think the biggest takeaway for me is that we need to be adaptable.
Adaptable. How so?
Well, the market is constantly changing.
Oh, yeah, it never stands still. Exactly.
Mm-hmm.
So we need to be willing to adjust our strategies as needed.
Like Buffett is doing right now.
Precisely. He's not afraid to sell off his holdings if he thinks they're overvalued.
And he's not afraid to buy into new sectors if he sees potential there.
Right. He's always looking for opportunities to grow his wealth.
And we should be doing the same.
Absolutely. It's about being proactive and not being afraid to make changes.
So don't be complacent.
Exactly. Stay informed, stay curious, and stay ahead of the curve.
I like that, stay ahead of the curve.
That's the goal.
And speaking of staying ahead of the curve,
Yeah.
let's talk about some specific strategies for incorporating smaller companies into our portfolios.
Okay, sounds good.
We've already touched on ETFs and mutual funds, but what are some other approaches we can consider?
Well, one option is to focus on specific sectors or industries that are poised for growth.
Like we talked about earlier with AI and renewable energy.
Exactly. Those are just a couple of examples.
But there are countless others, right?
Absolutely. It's about finding those areas where you see potential.
And doing your research to identify the companies that are leading the way.
Exactly. And don't be afraid to think outside the box.
Like, what do you mean?
Well, sometimes the best opportunities are in those industries that are overlooked or misunderstood.
Oh, so like the contrarian approach?
Kinda, yeah. It's about going against the grain.
And betting on those companies that you believe in.
Exactly. But remember, even if you're confident in your research,
Yeah.
it's always wise to start small and gradually increase your exposure as you gain experience.
Don't bet the farm on one horse.
Precisely. It's about managing risk and protecting your capital.
Okay, so we've talked about diversification, due diligence, understanding our risk tolerance, and exploring various strategies for incorporating smaller companies into our portfolios.
Yeah, I think we've covered a lot of ground today.
We have, and it's been a fascinating conversation.
Definitely, I've learned a lot.
Me too, and I hope our listeners have as well.
I hope so.
So what's the big takeaway for you from all of this?
I think the biggest takeaway for me is that we need to be open to new ideas.
Open to new possibilities.
Exactly. Because the world of investing is constantly evolving.
And if we want to succeed, we need to be willing to adapt and change with it.
That's the key.
So don't be afraid to challenge your assumptions.
And to explore those lesser-known corners in the market.
Because you never know where you might find the next big opportunity.
Exactly. And that's what makes investing so exciting.
A thrill of the hunt.
The potential for discovery.
It's all part of the game.
And it's a game that anyone can play.
That's right. You don't have to be a billionaire like Warren Buffett.
You just need to have the right mindset.
The willingness to learn.
And the courage to take action.
I like that, the courage to take action.
Because at the end of the day,
yeah,
it's not about just sitting on the sidelines.
It's about getting in the game.
And making your own moves.
Exactly.
Yeah.
So go out there and explore.
And see what you can find.
I feel like we could talk about this all day.
And there's always more to learn.
Right. But I think we've given our listeners a good overview.
Yeah. Definitely plenty to think about.
So to wrap things up,
Okay.
what's the one thing you want our listeners to take away from this deep dive?
I think the biggest takeaway for me is that investing doesn't have to be complicated.
Oh, that's good. Yeah, it can seem intimidating sometimes.
It definitely can, especially with all the jargon and the news headlines and the constant fluctuations.
Right, it's easy to get overwhelmed.
But at its core, investing is really about understanding businesses.
And understanding yourself.
Exactly. Knowing your goals, your risk tolerance, your time horizon.
And then finding investments that align with those things.
Right. It's about making informed decisions.
And not being afraid to ask questions.
Absolutely. If you don't understand something, don't be afraid to ask for help.
There are so many resources available these days.
Yeah, books, websites, podcasts, financial advisors.
You name it.
So don't be afraid to reach out and get the information you need.
And remember, you don't have to be an expert to be a successful investor.
That's right. The most important thing is to just get started.
Even if it's just with a small amount of money.
Exactly. The key is to start building that habit of investing.
And to keep learning and growing along the way.
Because the more you know, the more confident you'll become.
And the better decisions you'll make.
So keep exploring, keep learning, and keep diving deep.
And most importantly, have fun with it.
Yeah, investing should be enjoyable.
It's about building your future.
And creating a life that you love.
Well said. I think that's a perfect note to end on.
Yeah, thanks for having me on the show. It's been a pleasure.
It's been great having you. Thanks for sharing your insights.
Anytime.
So to all our listeners out there, thanks for tuning in, and see you next time for another deep dive.
Until then, happy investing.